I'm Grant Palmer, and I'm a partner with Cordia Resources by Cherry Bekaert, one of the sponsors for the series. As you'll see, we have 4 other great local sponsors who I'll introduce shortly. I also want to thank and acknowledge Cherry Bekaert for their interesting and informative presentation on anchoring your foothold in GovCon and DCAA's hot topics as presented last week to the FEF group by Tracy Sheps, Brigitte Scott, and Jeff Inessa. It was a great program. Our sponsors were excited to see such a great response with over 600 people registered for this series. We know and understand how valuable these high quality and relevant training events are to financial professionals managing corporate accounting and financial functions. Once again, we're providing this series in a fully virtual format and are running it in 2-hour sessions every Thursday morning over a 6-week period. We found that this format works best for our collective clients and friends. Today is our Virginia Ethics session, which is the required 2-hour annual CPE course for CPAs licensed in the state of Virginia. This session is being presented by Jennifer Lewis from the AICPA's Business Learning Institute. Should also know that we have a great team supporting us today, but please bear with us should there be any technical difficulties. As you can see, we have 6 great programs for you in this year's series. If you fully attend all 6 events and you're a CPA, you can earn a total of 12 full CPE hours. Last week, the Cherry Bekaert team, as I mentioned earlier, presented Anchoring Your Foothold in GovCon and DCAA's hot topics. Today, Jennifer Lewis will once again join us as our ethics instructor from the AICPA's Business Learning Institute and will teach our Virginia Ethics program. The 2-hour course is required by the Virginia Board of Accountancy. Next Thursday, October 24th, Marsh McLennan, a new sponsor to the FEF, will present Managing Your Risk, Innovation in Employee Benefits and Business Insurance. On Halloween, October 31st, the Wells Fargo banking team will present their Economic and Capital Markets Update. And finally, on November 7th, Sage, also a new sponsor to the FEF, will present How AI and Digital Networks Will Shape the Future of Accounting. Before we move forward, I'd like to cover our basic CPE webinar rules. In terms of NASBA compliance, our polling questions will appear throughout the webinar. You will need to answer 75% of the 8 polling questions to receive full CPE credit for each session. Any answer to a polling question, correct or incorrect, counts towards 75%. Since you'll be muted during this entire session, please use the Q&A feature to submit your questions to the panelists. Please also use the chat feature to communicate any technical issues that you may have. After the program, please complete the session survey using the link that we will send to you in the post-event email. Your CPE certificates should be issued within 10 days, if not sooner, of this course. If you have any questions, please reach out to Cherry Bekaert Learning at cbhlearning@cbh.com. Now I'd like to acknowledge our great team of sponsors for this entire 2024 Financial Executive Forum series. Our first sponsor is Wells Fargo Bank. Wells Fargo, a well-known national bank, is represented by Ben Kane, their Senior Market Director. Wells Fargo Commercial Banking is a returning and longtime sponsor of the FEF. Our second sponsor is Marsh McLennan Agency, a leading provider of business insurance, employee health and benefits, retirement, and private client insurance to organizations and individuals. Marsh is a new sponsor this year and is represented by Allie Gregory, an employee health and benefits consultant. Third is Sage, a leader in finance, HR, and payroll software. Also, Sage's digital network connects SMBs, reduces friction, and delivers insights by digitizing business processes. Sage is also a new sponsor this year and is represented by Letitia Bradley, Senior Partner Marketing Manager at Sage. Our fourth sponsor is Cherry Bekaert, a top 25 nationally ranked accounting firm specializing in tax, audit, outsourced accounting, advisory, and system services, who is represented by Tracy Sheps, a CPA and a partner at Cherry Bekaert. Our fifth and final sponsor is Cordia Resources by Cherry Bekaert, a leader in recruiting and staffing services in accounting and finance, technology, HR, contracts, and administrative support services, and is represented locally by Doug Smith, one of our key managing directors who leads our sales and staffing services team at Cordia Resources. And as you can see, this is our full agenda for today's event. Now I'd like to introduce Jennifer Lewis, who will be leading our Virginia Ethics Training Program today. Jennifer is a licensed CPA and founded Emergent Solutions Group, LLC in 2003, where she focuses her energy on designing and delivering high-quality, practical, and engaging accounting and auditing training. She was most recently Director of Audit Product Development at Surgent Professional Education. Prior to that, Jennifer served as Director of Training Services at Audit Watch Inc. She was the Financial Operational Audit Manager at AARP and was an Audit Manager for Deloitte & Touche. Jennifer graduated summa cum laude from Marymount University with a BBA in accounting. Besides loving life on the lake with her husband in Charlotte, North Carolina, she enjoys hiking with her, and pardon my French, coton de Toulouse dogs, and savoring any precious moments spent with her 2 young adult sons. Let's please give Jennifer a warm welcome. Jennifer?
Hello, everybody. Welcome to the program. If you give me just a moment, I'm going to switch over so I can share my presentation on the screen here. All right, I think it should be working now. So thank you for that warm introduction. I'm happy to be here with you all today, where we are going to be covering the general business ethics, and our learning objectives are going to include talking about what are some of the foundational principles under which you would be guiding some of your ethical decisions. We'll be talking about a variety of ethical concepts, both from the personal as well as professional side of things, but our main goal is to really help to ensure that as we are running businesses or as we're functioning within our professional responsibilities, that we are basing those on thinking about what would be the most ethical thing for me to do, given some different choices that I might have. Now, having this being the Virginia approved version of the program, we are going to show the VBOA video. So it is a video that's going to run, and then once the video is completed, we'll come back and we'll continue with the rest of our program. So I'm going to switch over to run the video here, and then I will come back on and be back with you.
Welcome to the Virginia Board of Accountancy's 2024 Ethics segment, a compilation of tips from the VBOA to help you as CPAs and CPA firms keep your license in good standing. As a licensed Virginia CPA, you are responsible for knowing and following the Virginia laws and regulations governing how CPAs can and should perform professional services and represent themselves. Each year, we choose a few to highlight in this segment. This year, we will discuss 1. The board's mission and authority. 2. Qualifying CPE. 3. License statuses. 4. Use of the CPA title. 5. CPA firms and peer review. 6. Reporting information to the board. Let's start with some background. The primary mission of the Virginia Board of Accountancy is to protect the citizens of the Commonwealth through a regulatory program of licensure and compliance of CPAs and CPA firms. The Board of Accountancy was created by an act of the Virginia Legislature, and its authority is granted through the Code of Virginia statutes and board regulations. In addition to establishing the qualifications for applicants of the CPA exam and licensure, the board makes regulations in accordance with the authority conferred upon it by the Virginia Administrative Process Act, which are necessary to assure continued competency and to effectively administer its regulatory mission. The board has the authority to bring enforcement actions against licensees for violations of the Code of Virginia and the board's regulations, including lack of compliance with continuing education requirements, substandard practice, violations of the standards of conduct and practice, and disciplinary sanctions brought by other federal or state agencies. Penalties and sanctions include cease and desist orders, monetary fines up to $100,000 per violation, restrictions placed on the CPA or CPA firm's practice, and the suspension or revocation of your individual and/or firm CPA license. If you fail to follow the applicable laws and regulations, you will be subject to discipline and may have your license suspended or revoked. In this regard, a CPA license issued by the VBOA is different from other finance-related professional credentials. which are typically issued by membership organizations. Membership organizations are generally limited in their authority and ability to affect the related credential. However, all licensees should be aware that the Code of Virginia does incorporate interpretive guidance from various membership organizations or standard-setting authorities, such as the AICPA Code of Professional Conduct and their various technical standards. Next up, qualifying continuing professional education, or CPE. The Uniform Accountancy Act Model Rules define CPE as the set of activities that enables CPAs to maintain or improve their professional competence, calling CPE an integral part of the lifelong learning required to provide competent service to the public. Fulfilling the continuing education requirements helps set CPAs apart as financial professionals. If you have an active CPA license, you must complete 120 CPE hours over a rolling 3-year period, with a minimum of 20 hours each calendar year. Licensees must also complete a 2-hour VBOA approved ethics course, such as this one, every year. You can apply for an exemption from the CPE requirements from the board. Exemptions are granted in writing by the board and must be renewed on a yearly basis. Without being granted an exemption, all active CPA license holders must complete CPE regardless of employment status or occupation, including if you are retired but still maintain an active license. The triggering event to require the completion of CPE is the active license status, not your employment status. If you have retired or are planning on retiring, or if you are employed in non-financial related occupations, you are encouraged to apply for an inactive license. If granted an inactive license, you are exempt from the CPE requirements. Additionally, if you release or authorize the release of reports on attest services, compilation services, or financial statement preparation services for persons or entities in Virginia, you will need to complete a minimum of 8 CPE hours each year related to such services. These 8 hours are inclusive of the yearly minimum of 20 CPE hours and 3-year rolling period minimum of 120 CPE hours. To find CPE requirements for new licensees or information about CPE reciprocity, please visit the board's website. Remember, when you renew your license, you are certifying that you have met the CPE and documentation requirements, which can be found in the Virginia Administrative Code regulation. At each renewal, you are certifying for the previous 3 calendar years. If you realize that you did not meet the requirements, you may self-report a deficiency. Individuals who self-report a CPE deficiency are subject to lower penalties than those individuals who fail a CPE compliance audit and do not self-report. What counts as CPE? In general, acceptable CPE may be obtained through a variety of forums, provided there is a means of demonstrating that education was obtained. Generally speaking, CPE can be any organized training that helps you become a better professional and does not have to be only accounting and auditing courses. Evidence of satisfactory completion of CPE for traditional courses are certificates of completion that include the sponsor's name, participant name, course content, date taken, and hours earned. Other forms of evidence of completion are also acceptable for CPE obtained in other forums. Whether documentation is acceptable for these other forms is determined on a case-by-case basis. However, receipts, registration confirmations, canceled checks, outlines, presentation slides, and sign-in sheets are not acceptable forms of evidence of completion. Here are some examples of other qualifying CPE. An accountant who is also an IT auditor is required by their firm to complete cybersecurity training. If there's a certificate from the trainer or sponsoring company certifying length, date, and participation in the training, it can also count toward the CPE required for the CPA license. A CPA enrolled in accredited college courses can earn 15 CPE hours for every completed semester hour of credit. A transcript showing the credit hours earned is required. A manager presenting a 2-hour-long program for their team on Excel tips and tricks can earn up to 4 hours for prep time as well, giving them 6 total CPE hours. Documentation for this activity must include the agenda that reflects the trainer and the length of the training, the participant sign-in sheet, and copies of any CPE certificates that were awarded for the training. Earning certain professional certifications can also be considered for CPE hours. The board's full CPE and documentation requirements can be found at 18 VAC 5-22-91. The VBOA conducts random CPE audits several times a year. If you are selected for a CPE audit, you must respond to the audit request within 30 days. Non-responses and those who fail to meet the CPE requirements based on the results of the CPE compliance review will be referred to the Enforcement Division of the Board for disciplinary action. Remember, you can use NASBA's CPE audit service to track your CPE. Through the service, you can upload your certificate of completion for each course you take. Now let's talk about license status. In general, to be in the active status and use the CPA title, you must renew your license on or before June 30th of each year, meet the CPE requirements, and pay the $60 renewal fee. Inactive status is not automatic. You must submit an application and then, if granted, receive approval in writing from the board. This status was created primarily for retirees, stay-at-home parents, or caregivers, those who put a pause on their careers, and those who have completely changed careers, such as nursing or elementary school teaching. If your current job duties or volunteer work require the use of accounting, auditing, financial, tax, or other related skills, you will not be approved for inactive status. Professional roles with titles such as financial analyst or consultant that are engaged in tasks like evaluating cash flow, financial systems, budgeting, or establishing financial performance indicators are all roles that would not qualify for inactive status. If a person's CPA license or accounting degree was considered during the hiring process, they likely will also not qualify for inactive status. Even CPAs who work in IT or any type of audit or compliance function, or who work primarily in finance or accounting programs, will most likely not qualify. During the inactive application process, you must certify that you are not providing any services, and you will inform the board of any employment or position changes. In addition, you may not move into a position that includes any financial services without first notifying the board and renewing your active license status, which would include completing 120 hours of CPE and the current year's VBOA approved ethics course. Inactive status requires an annual renewal and payment of a $60 fee. Each year during the renewal process, the licensee must certify that they continue to meet the inactive requirements and there has been no change in position or responsibilities. Disciplinary action can be taken for those that falsely certify on any application to the board. If you do not renew your license on or before June 30th each year, your license becomes expired by default. With an expired license, you can no longer use the CPA title, refer to yourself as inactive, or engage in services that would require a CPA license. All references to your active CPA licensure and use of the CPA title must be removed, or you will be subject to disciplinary action as previously discussed. Now let's discuss using the CPA title. As defined in the Code of Virginia, using the CPA title in Virginia means using CPA, certified public accountant, or public accountant in any form or manner in written or verbal communication to persons or entities located in Virginia, including but not limited to the use in any abbreviation, acronym, phrase, or title that appears on business cards, email addresses and signatures, internet postings including social media, letterhead, reports, signs, tax returns, or any other document or device. Only those with an active Virginia CPA license, those who have been granted inactive status by the board, or those CPAs who are licensed from another substantially equivalent jurisdiction may use the CPA title. No other individuals or entities may use the CPA title in Virginia. There are no exceptions to this, even for persons or entities who were formerly licensed. A number of VBOA enforcement cases last year were related to the unlicensed use of the CPA title. CPAs who no longer hold an active license are being disciplined because they, in some form or manner, used the CPA title or refer to themselves as a CPA. Penalties for unlicensed use of the CPA title range from reprimands to monetary fines. Here are some examples of how unlicensed individuals used the CPA title in violation of the Code of Virginia. In an advertisement stating, leveraging experience as a CPA, in a written company biography, having been a CPA for 20 years, failing to remove the CPA title or reference to being a CPA on social media, such as LinkedIn. CPA also cannot be used in a domain name, including .cpa, which is sponsored by the AICPA, unless the individual and/or firm using the domain holds an active CPA individual or firm license. Firms and employers who list or advertise employees and identify these individuals as being a CPA are responsible for ensuring such individuals are allowed to use the CPA title in Virginia. If a firm or employer is found to be advertising or identifying a person using the CPA title, and that individual is not permitted to use the CPA title in Virginia, both the individual and the firm can be held responsible and be subject to discipline. Many individuals and firms find themselves in violation of the use of the CPA title rules by simply failing to timely renew their Virginia CPA license by June 30th of each year. Remember, just as you cannot drive without a valid driver's license, you cannot use the CPA title in Virginia without the appropriate license. As always, if any questions arise, please contact the VBOA. Our next topic covers tips for CPA firm licenses in Virginia. Virginia requires that at least 51% ownership of a CPA firm be actively licensed CPAs. In addition, non-CPA owners must participate in the firm's activities on a regular, continuous, and substantial basis. If the non-CPA owner fails to participate on a regular, continuous, and substantial basis, they place the firm at risk of losing its firm license. All Virginia CPA firms must renew their license annually by June 30th, and each firm must appoint an active Virginia CPA as the principal licensee. It is important to note the principal licensee's individual license must be renewed prior to or at the same time as the firm's CPA license. If the services provided by the firm are within the scope of the practice monitoring program of the American Institute of Certified Public Accountants, the firm must also be enrolled in peer review and must fully participate in the AICPA's facilitated state board access. Virginia does recognize firm mobility. However, if a firm is offering a test, compilation, and/or financial statement preparation services, and the firm has an office location in Virginia, the firm must hold a Virginia CPA firm license. An active CPA firm license is required for those firms who use the CPA title or use the .cpa domain. Attest services means audit, review, or other attest services for which standards have been established by the Public Company Accounting Oversight Board, by the Auditing Standards Board, or the Accounting and Review Services Committee of the American Institute of Certified Public Accountants, or by any successor standard-setting authorities. If the highest level of service a firm offers is financial statement preparation, the firm must have a license but is not required to enroll in peer review. This change was effective in 2015 when the Statement on Standards for Accounting and Review Services number 21 was adopted. Financial statement preparation is covered under Section 70, but many CPAs were not clear on what constituted preparation of financial statements. In June 2023, the AICPA issued an interactive decision tree to help practitioners determine whether the standard on performing preparation engagements applies. These materials are available on the AICPA website, and all CPAs that prepare financial statements for clients should carefully evaluate this interpretation to understand if the services they provide fall within the scope of SARS 21, Section 70. If they do, a firm license is required. Remember, individual CPAs and CPA firms that do not hold an active license may not perform attest services, compilation services, or financial statement preparation services, even if they are not collecting a fee. Only an actively licensed CPA firm may advertise and engage in these services. Finally, we want to review your obligations to report information to the board. As a CPA, you are responsible for communicating essential information to the board, detailed in the Code of Virginia. This regulation also dictates requirements around CPE audits, disciplinary actions, and your ethical responsibility to file a complaint if you see a violation of any regulation. It states, each licensee or applicant shall respond within 30 calendar days to any board request for information regarding compliance with any statutes or regulations pertaining to the board or any of the programs that may be in another title of the Code of Virginia for which the board has regulatory responsibility. In other words, if the board makes a request of you, you must respond within 30 days or you will be in violation of the regulation. You must also notify the board in writing within 30 days of any of the following: changing your legal name, physical address, or email, any administrative disciplinary action the licensee is the subject of before any court, state, or federal agency or standard-setting bodies such as the AICPA, IRS, etc., any felony or misdemeanor conviction, any guilty plea or plea of nolo contendere, any final judgment rendered against you in civil court, any receipt of a peer review report or PCAOB firm inspection report criticizing or identifying defects in the firm's quality control systems, In closing, we hope you have learned useful information from this 2024 VBOA ethics segment. The VBOA website, boa.virginia.gov, is a great resource for further information. If you have questions about any topics covered, please contact us at boa@virginia.gov or 804-367-8505. This concludes VBOA's segment of the 2024 Approved Ethics course. Thank you for watching, and please enjoy the rest of your chosen ethics course.
All right, everybody, welcome back to the program. To affirm, there were no polling questions that were launched during the video, so nobody missed anything in that regard, but we will have some polling questions coming up here in just a moment. Just affirming, there was a question that came up about the CPE. And if you go to a program and you have a certificate of completion, in order for you to have it qualify for CPE, you do have to make sure that it has all the necessary elements in it. So it's not just that you completed a program, but it has the details like how many CPE hours are being awarded and other pieces of information, which you could gather in some way, like in perhaps as you might work with the sponsor of the program to make sure that you have all the required elements. There is on the VBOA's website, as well as the information that they provided at the end, there's always contact information that you can reach out and talk to them about the situation specifically and double check to focus on the fact that, is this appropriate? Is this enough information that if you were selected for the review for your CPE, to ensure that you had all the necessary documentation. Also, this does qualify towards the Maryland CPE requirements if you are somebody that is looking to check for that. In getting into the core part of the program now here, when we look at the sense of ethics, when we go backwards in time and we look back to the philosophers that might have existed back with Socrates and Plato and Aristotle, when they were focusing on what's moral, they did focus on what is morally good or bad, what's right or wrong. But for them, they were focused on what does it mean to be good, and how is it that we can be happy as individuals. And they said the only way that you can truly be happy is that you are doing things that are considered to be good. And the goodness does come from your wisdom, your character that exists. Aristotle went through and looked at things to also say, well, when we say what's good, what's bad, what's right, what's wrong, that there was what he called the golden mean. So there is a balance in our lives that we have to achieve as we're trying to determine, like, we want to make sure that we're not living in excess, but we're also not living in deficiency. And they said that oftentimes what is the moral thing is that there's an intermediary. So, for example, he would say to be brave is the middle, the intermediary between cowardliness and recklessness, right? And there's a sense of excess and a thing that they're focused on as far as deficiency. And they said by aiming at what is both good and just, that's the part that can be sustainable, right? As we think about the sustainability of happiness and we think about the sustainability of having a life of virtue. And Aristotle did have his 14 virtues. And you can see by looking at the slide that sometimes they do contradict each other. That I need to take pride in my accomplishments in order to be happy, but also I need to be modest. I need to live well, but I also need to be temperate. Right? This sense of looking at this, I need to have concern for others, but I also have to be truthful. And sometimes those things will contradict each other. So for our first pulse check here, have you ever lied to get out of a social engagement that you did not want to attend? It would be A, yes, B, no, C, maybe. We'll give people a chance to respond here. But this is an example of Aristotle's like virtues in balance. in that I need to be concerned for others. I don't want to hurt somebody's feelings by saying, I don't want to come to your social engagement for whatever reason it is, whether it is that there's something else that you would rather do, whether it is that it's just too far and you don't want to drive there, whatever the reason is, you don't want to hurt their feelings. And so we end up trailing what we call white lies, right? As we think about, we're not being fully truthful, but yet we're doing it to perhaps spare the feelings of the other individual. And so often we may find ourselves in these situations where, going and saying, I'm going to be 100% truthful is something that would ultimately cause some harm. And there an intermediate or in a balance that we can function within that would be sustainable over a course of time. And so it is important that when we are looking at these aspects of things, the majority of you did say, yes, we have done this in the past. We ultimately are going to have to make sometimes decisions to figure out where is it that I'm doing the greatest amount of good and the least amount of harm. And that often is a factor in our personal lives, but also can be a factor of what we might see in our professional lives as well. Now, we all want to have where we're perceived to have a sense of integrity, right? Integrity is something that if you have integrity, then nothing else matters. That you can be trusted to be able to do what is considered the fair and just thing. If you don't have integrity, then also nothing else matters, right? If people don't perceive you to have integrity, it is perceived to be a character flaw. And when we think about being CPAs, one of the principles within our AICPA Code of Professional Conduct is that we do function in the public's interest and we function with a sense of integrity and objectivity. So whether I am in public practice, whether I am working for an organization as a controller or a CFO, whether you're even retired, but you're still actively licensed, they would expect that as a behavior that you could be acting in a way, making choices and decisions in a way that demonstrates a sense of integrity. And it also is with Cicero that said moral men would do nothing dishonest, even if actions were to be hidden forever from the knowledge of gods and men. The code of conduct that we abide by as CPAs is also counting us to self-regulate. So even if somebody wouldn't know that I was faced with this ethical dilemma, I'm still going to do the thing that I believe to be the most fair and just response as I'm making moral decisions in all of my actions and all my behaviors. Now, Ernst & Young, you may have heard, paid $100 million in fines after their auditors cheated on the ethics component of CPA exams and CPE courses. So this occurred within the time frame of 2017 to 2021, and E&Y admitted as well that they were withholding evidence when there was an investigation that was prompted by the SEC's Enforcement Division. This is one of the largest penalties that's ever been imposed by the SEC against an auditing firm. And then you also saw trickle down from that. For example, Texas followed on with an additional $3 million fines on top of the $100 million that was penalized by the SEC. You would think, right, that as we focus on what is cheating, right, that cheating on your ethics component is probably the worst thing that you could possibly cheat on. But it's also something that they're saying anything that's meant to be that the intention of these principles, like having continuing education requirements, right, is to ensure that we are bettering ourselves, right? We're committing ourselves to the principles of our profession, and things that contradict that, right? That make it something that puts a mar on not just you, but the profession as a whole, and the level of trust that people can put in the CPA designation, they're definitely going to come down a little bit harder on you in those areas. Now, it's not just E&Y, PwC in Canada, they also were fined over $1 million in US dollars for breaching a code of conduct in 2023, where they had 445 staff that participated in answer sharing. So for them, they're like, hey, this is training. We're just sharing answers. We're having an open book test. But it really wasn't intended for this to be an open book test. What they were doing is the staff created a shared drive where they gave answers to 46 out of the 55 mandatory tests that they had to take for their firm. And putting the answers there allowed for people to just skip right to the final exam and to go in and fill in the answers and pass the test to merely get the CP certificate. Now they're claiming they didn't know that this was wrong. Like, we didn't think this was a problem. We thought it was open book. But really, it's something that you should know that that isn't the right thing to do, right? In looking at the circumstances, do you have integrity? Just because you can do something doesn't mean that you should do it. And that's really the principle that they're trying to reinforce within the code. We also had where PCOB levied fines in other places for this answer sharing that was happening, where people were either receiving or providing answers through various software capabilities, as we have shared drives and other ways where we can store data and information that's accessible. It does become more of a problem. But it's not always just the answer sharing, the cheating on your CPE. It also, with PwC Australia, there was a partner that leaked some confidential information. This particular partner was an expert in the tax arena, and the Australian government, the tax office, hired this partner to say, hey, we're going to have you be a consultant to us, as they were looking at potentially changing the tax legislation. And what happened, though, as they were getting close to having the final regulations, the PwC partner gave a heads up to other partners within the firm. And these other partners were now using this information to go out and start engaging with clients to say, hey, let's get you ready for this new legislation that's coming. But they had advanced information. This wasn't public information yet about what these final regulations were going to be. And so they're saying you shouldn't have used this information to create billable hours for your firm. It is not ethical. And there was some mandated training that was put into place to say, hey, this was a conflict of interest, right? For you to be offering these services through your firm at the same time as participating on this body that was going and working on the actual tax legislation. What you'll see as an effect of this is that for the professional ethics committee of the AICPA, they did recently change how the language in the code reads to say, for example, when we have the area of you shouldn't solicit or disclose CPA exam questions and answers, well, they broaden it to also include any activity that is related to acquiring or maintaining qualifications or competencies as a CPA. Should they have had to broaden that interpretation, they did do it to make it explicitly clear. But because of all these scandals that they saw with where there was this answer sharing and people going straight to the final exam and just passing the test as opposed to actually doing the training, they're saying that's not proper. That's not consistent with these foundational principles that we're trying to establish for what it is that would be acceptable or non-acceptable behavior. There's a wide variety of ethical dilemmas that we have to deal with in today's society as we're thinking about what is, when we think about preparing and fairly presenting financial statements and disclosures. as we look at protecting personal private information, as we have more data-driven societies that are using IT, when we think about other matters such as health and safety and nepotism and harassment and discrimination, all of those would be things that as a professional, that as you make decisions about these matters, that they are counting on the fact that you will look at what is the fair and just thing to do, right? What is it that we believe as we look at the golden mean, as we have to make decisions sometimes? Can't always make perfect decisions. It's not always black and white. We live in a world of gray. And what we need to do in that world of gray is to self-regulate to ensure that we're thinking about what would be the most fair and just thing for me to do. Where can I have the greatest amount of good while also minimizing the least amount of harm, but at the same time, complying with my responsibilities to my employer or to my client, but also my responsibilities to the profession as we think about the application of our code of conduct. So we're going to do another pulse check here. You may have heard that there's something called coffee badging. So coffee badging is as you now have these organizations that are encouraging people to come back into the office, that they might mandate that you need to be in the office for X amount of time. And so they may go through and say, okay, I'm going to go in, swipe my card to show I've entered the building, go around, have coffee, socialize with my employee, my coworkers, and be there for the designated time, and then swipe back out again. So they're not really coming in and really doing actual work, right? They're just doing the minimum amount to be able to designate that they were there and then to leave. So if you're aware that you have somebody that is violating what would be a policy, a procedure, right? Something that is now an expectation, a directive that might be coming from management or governance, we need to consider, um, now what's my responsibility when we're having the CPA designation, right? Part of when they're saying what would be prudent, what would be professional, what would be something that would be a decision with integrity, it would be that I now have an obligation to speak up. If I know or suspect that there is an intention to deceive, where there is a fraud, right? If I know or suspect that there may be non-compliance with a policy, a procedure, a law, a regulation, a provision of a contract or an agreement. When we focus on these matters, right, they're saying that as a CPA, you're holding yourself to a higher bar and that you are going to ensure that you don't permit others to do something that you know is unethical, right, is inconsistent with expectations. I can't do it, but I also can't knowingly allow somebody to do it without taking an appropriate response. So if you are thinking about integrity, the integrity is going to include the fact that that we do have these additional responsibilities, and 49% of you answered yes, right? That you do understand that there is that obligation that needs to exist. Now, there can be various reasons as we have focused on things where you can rationalize certain decisions that you're making. It's legal, so therefore it's okay. It's something where nobody's going to get harmed, or or it's something that nobody's going to know. If I didn't personally benefit it, it's not me that's doing it. Each of these are not truly going to be perceived as excuses for something. But certainly as we look at these matters, right, there was, while we say it's not material, materiality can be something that is either quantitative or qualitative. But we do have cases where there is going to be something where I know that somebody's going to be negative affected by this action or this decision, right? I know that I may not be fully doing something as I find balance. As we talked about, I need to make sure that I have a truthfulness, but I also have concern for others. It is the Aristotle principles of finding that golden mean that it's from a practical point of view. We live in that world of gray. So we're going to be shifting the conversation here to be focused on um, the business ethical side of things, where we are focusing on the actions and the decisions that pertain to business practice, as we have principles and standards that pertain to what is right and what is wrong. There was a study that was done where they looked at employees, and 94% of employees surveyed say it's critical or important that they work for an organization that they believe is ethical. And 82% of those employees said, I would rather get paid less to work for a company that I believe to be ethical than receive higher pay and work for an organization that has questionable ethics. And 30% of those surveyed had said, I have left a job for ethical reasons. So it is something that's important, right? It's not just important because it's the right thing. It also is important because it creates a culture within an organization that will influence whether or not employees, customers, vendors, contractors, do we want to be associated with this organization? Is the organization perceived to have ethics and integrity in order for me to want to be affiliated with them? And that is something that is important. And it's actually something that's been growing in importance as we look about the future generations, as we have with millennials and Gen Z. They do care about these issues even more so than we do with prior generations. And maybe part of that is because so much with social media is out there, right? As you go and you can see where something gets put on social media about a company that made an unethical choice or decision. And now anybody that has that company on their social media, as far as their qualifications or their background or their experience, like you're now tied to that. And people are more aware of the association, the guilt by association that could come from being associated with an organization that isn't perceived to have ethics and integrity. I do also want to acknowledge that in that golden mean, right, as we're trying to figure out putting things in balance, those that are running organizations, management, governance, supervisors, but even frontline personnel, we have to have a fiduciary responsibility to investors. We need to maybe be where I am a nonprofit and I have a responsibility to my membership. I might be a local government and I have responsibility to my citizens. But there are stakeholders that we're looking to provide a rate of return to fulfill our mission, where we have the need to be transparent as we're providing information, both financial and non-financial information that might impact decisions that people are making, might impact their perspective about the organization. But at the same time, while I have to focus on my stakeholders, I also need to think about my employees, my customers, my suppliers. I need to think about treating them fair. I need to think about their well-being. I need to think about their rights. And so I can't just focus on the owners or the members or the citizens. I have to think about these other groups that are also affected by my actions, by my decisions. I also need to think about things like in an environment that we need to focus on ESG, environmental, social, governance factors. The societal component has always been a factor, but it also has been increasing as a factor as there's more interest in some of these metrics and some of these actions and decisions that would affect climate change or affect whether or not we have a diverse population within our customer base or within our employee base. Like these are all things that are growing in importance, and there does need to be consideration around, as I make a decision, how's it going to affect each of these different categories that exist. Right. So when we look at this, we might say, well, is it ethical, for example, for me to use inside knowledge for my own profit? So whether I am working for a public company where there is investors, potential investors, or we have publicly traded equity shares, certainly we've got insider trading and other regulations that make it explicit like this is bad. But even if I'm working for a privately held company, a nonprofit, a government, should I use inside information for my own profit? While there might not be explicit regulations against it, it's still not the right thing to do. And I think that most of us could agree on that provision. Right? There's things that would be readily apparent to a prudent person looking at the facts and circumstances to say, yeah, I don't think that was the right choice. We also need to also keep things in balance as we have to make investments in maybe upgrading our facilities. So, do we spend the money on investing our facilities because we don't want there to be unsafe working conditions as relates to our employees? Because I have to think about the fairness and the well-being of the employees that are working these facilities. The money to be spent in this area might become more of a priority because I have to also morally, ethically counterbalance the impact of this spending decision on this other group. When we're thinking about child labor, like we can say, okay, we can probably readily agree that using child labor in the production of goods is not the right thing. Now, do we buy supplies and materials that are maybe produced in a country that does use child labor, right? Ethically, are we thinking about our purchasing decisions and where we're purchasing from? That we're not always going for the lowest cost provider, but we're counterbalancing how we have to think about society as a whole. And how is our decisions inconsistent with these societal principles that we would want to abide by? We can extend things to be like, well, maybe not as just child labor, but what about only buying made in America things, right? Do we spend more on purchasing something that was produced in America, or do we go for the lowest cost item? There's a variety of things that as we even can think about one element, but what about variations of it? Like, where is it now that we might have where we might even realize that are in an ethical dilemma? And a lot of times it is that there's things that from news articles and occurrences that we get a sense of what's acceptable behavior because it's very clear that the majority of society agrees that this isn't right. It gets tougher when you're in a case where it's not as clear as far as what others think, but I now have to think about my own morals and principles and say, well, what are we going to do just because we think it's the right thing? When we're focusing on outsourcing jobs to overseas workers, right? Where a lot of organizations do that as they're outsourcing certain roles and positions that can be done in other regions of the world and that might be cost beneficial. But how does that affect the ability to employ our US workers is another dilemma about things that we need to figure out as an organization as we think about governance. So when we say environmental, social governance, the governance element of that is what's the standards that management and governance are going to employ. As you're demonstrating as an organization, what is it that we value, right? What is it that we want to make sure that we say this is important and this should be a factor that may be more of a significant factor as we're looking at counterbalancing the effect of our decisions. The environmental component of things really addresses how an entity is potentially being exposed. And we need to take risks. There's risks that we have to take in order to take advantage of opportunities. And then there's risks that we want to mitigate or eliminate because it would result in negative implications. Well, you may hear the term enterprise-wide risk management, like ERM. The whole premise of ERM is that I've got to find this balance of taking risk in an appropriate way in order to benefit our stakeholders, our employees, our customers, our society, improve the environment. There's things we need to do, but we also want to ensure that we're minimizing the negative side. When we focus on the environment component explicitly, it is focused on climate change, greenhouse gas emissions, renewable energy, but also from a point of view of management, accounting, finance. We also have to think about litigations, claims, assessments, and other things that also could be a part of this. From the social component, it is fair labor practices, it's ethically sourcing materials, it's making sure that we're protecting the health and safety of our employees. It also includes protecting the data and thinking also about diversity, equity, inclusion efforts. The governance component is going to involve the diversity of the board. It's going to be how do we compensate our executives? What are our tax planning strategies? What is it that we're doing as far as our lobbying policies and practices? Do we have a code of conduct against bribery and corruption? How we govern ourselves is also critical. As I mentioned, there's a growing interest in these relevant ESG matters, and they're interested to understand how these decisions we're making for these other reasons, how is that affecting an organization's business strategy, their cash flows, their financial position, their financial performance. Whether you're a publicly traded entity that has to deal with SEC regulations and filings, in addition to other types of organizations, whether you are a business or whether you're a nonprofit or a government. There are parties that are seeking this information from a public policy perspective and potentially influencing behavior of these organizations, but also to understand the implications on the financial position results of organizations of the organization. So they are looking at as far as the benefits that are being perceived related to this ESG reporting is to better understand the opportunities and risks that exist in that particular area and having that be an impact on our long-term strategy decisions and how it is that we can integrate our focus on managing these risks in an appropriate way as we design our processes, our procedures, and ensuring that we also are avoiding being implicated in some form of failure that might ascribe to say you're not an ethical organization, right? You're not functioning with integrity. That risk of being associated with those concerns and those failures is also something that is a concern, particularly even from a customer point of view. If there could be an impact on customer preference decisions with brand loyalty, for example, that could exist as we're thinking about the reputation that occurs. So here's another ethical dilemma. Is it right for Google to force advertising companies to sign contracts to say, I'm not going to sign contracts with any of your rival search engines? If I'm going to advertise on Google, I'm only going to advertise on Google. So is it right for Google to force companies to do this? All right, so when we're looking at this, we're getting a lot of responses, and then the majority of the responses thus far are coming in on the no side of things. It does also go to thinking about for Google, it, to have and try to have a case where we can capture market share and try to ensure, right, that we're thinking about growing the organization and sustaining the organization. They could put these provisions in. The question becomes, should they? Like, do we believe that from the balanced point of view, as far as how are these decisions going to affect competition and affect startups and other organizations that are trying to compete against this monopoly, is it really the right thing to do? And that's the challenge that you have as we're thinking about how it is that we maybe structure our contracts and our agreements, right? What's our sales and marketing strategies? Like those governance decisions, these policy decisions do have to be something that we do focus on. In addition, as we're looking at these cases, just because something is legal doesn't make it ethical. You can probably go backwards in time and you can think about a wide variety of examples of things that were ethical norms at one point in time, but the law, right, didn't change fast enough to catch up with the norms that were shifting. And whether it's something like slavery, whether it's something like whether women can vote, right? There were a lot of things that while it was legal, maybe it wasn't the ethical thing. So I go back to, just because there's not a law regulation that prohibits something doesn't mean that in principle we should make it should be a factor in our decision making around what's the fair and just thing to do. Going all the way back to 1494, there was a Venetian, an Italian trader that created basically the accounting world and created the first accounting textbook. And in that textbook, they said, we need to build in this a discussion about ethics in accounting, because of the fact that the interest of the public has to be in the forefront of any judgment we make as a professional. And if we don't have a sense of ethics in what we're doing in accounting, there's going to be fraud, there's going to be malfeasance and manipulation of the data. We need to have ethics as a premise. From back in 1494 through today, we now have this code of professional conduct that we do need to try and focus on. So part of when we deal with things, then we have conflicts. Is it okay to consistently round up when you're billing customers for hourly work? Well, part of it would be, are you transparent about it? Are you telling the customers, when you engage me, I don't track in increments less than an hour. So you need to know, if I'm doing something for you for 20 minutes, I'm billing you for the hour. If I'm transparent about it and they're okay with that, then that's ethical. But to not have that transparency, to not let them know that's a part of how my billing processes work, you can make an argument that it isn't ethical. So it really sometimes depends on, are we being clear? Are we being transparent about the factors behind that would impact maybe somebody's decisions? Do I want to hire you as my vendor, right? Do I want to be your customer? Do I want to be your investor? Do I want to be your employee? The sense of transparency is going to be important and critical. Now, since in 1958, there was a Harvard University professor that created this level of moral development. And what's useful about this is it said, well, what influences your decisions? Like, what level of morality are you really emphasizing? At the lowest level, you're going to have a case where I just know out of sense of obedience that somebody's told me not to do this, so I just don't do it. But then sometimes we start making decisions because how it's going to affect me. We all start working in a sense of self-preservation. We also have a level of I want to make sure that if I do something, I'm going to get positive reinforcement, right? For those that know I made this decision, they're going to give me positive feedback. Level 4 is there's a rule, a regulation, a policy, a procedure that I'm abiding by. I'm functioning in a sense of law and order. There's something that says what to do or not do, and so that's what I'm doing. Whereas level 5 starts thinking about how your decisions affect others, right? So as we go to thinking about the ESG components, right, and thinking about those other areas, I'm starting to have a societal effect on my decisions. And then level 6 is also where we want to create a sense of uh, of equality, equity, right? A sense of principle consciousness. I don't myself totally understand the total differences between 5 and 6, right? I'm an accountant myself. I'm a CPA. We tend to really function in this world of maybe level 4. Like, what does GAAP say to do? Right? What does the regulation say to do? We follow the sense of a rules-based society, where really the pushing is to say, let's focus more on a principle-based society. And I do understand that with a lot of the provisions of Sarbanes-Oxley and a lot of the ways that current GAAP is being written and the way our code of conduct is written as from the AICPA, it is meant to be more principle-based and saying, yes, we're going to give you some examples of illustrations around how we think you should apply this. But at the end of the day, you've got to self-regulate. Like, you've got to look and make conscious, good decisions on your own. So let's say that your company has a debt covenant that says we need to keep a minimum current ratio, my current assets to my current liabilities, and it's related to this $1 million loan. Normally, your company ships large amounts of inventory on the last day of each quarter, right? So that's, if I ship it, it's going to end up being, if it's FOB shipping point, I'm going to be crediting my revenue. I'm going to be debiting my inventory. I'm going to be recognizing my cost of sales, right? I'm going to be having receivables. So let's say that this quarter there was a software glitch and we couldn't process the shipments. So we ended up not being able to actually ship them until the first day of the next quarter. And so in looking at these situations, then the thing would be, would it be okay for me to book the 1 day of shipments in this quarter in order to involve the fact that I might have a default on one of my debt covenants? From a ethical point of view, if you go back to that Kohlberg's theory of moral development, the base level of would be, no, you don't lie. Individualism would say, well, you'll lose your job if you get caught. In thinking about good boy, good girl, it's like you're not to blame for the software glitch. In number 4, it would be intentionally misreporting financial information is against our code of conduct. But in level 5, it's like the bank has a right to transparency as they're making good credit risk decisions. As we're looking at principal consciousness, it's like the bank, it is their need to be able to make good credit decisions. It also is the case that others may need access to this funding and they may be better credit risks, and you're not allowing them to get the credit because of the fact that you are misrepresenting information, right? As you're now the one that's taking these scarce or limited resources, right? There's not unlimited financing or unlimited funding. So that's an example of, as we think about applying this principle consciousness type decision. Is it right to forcefully remove an airline passenger from a full flight for a pilot that needs to get to the next city to replace another sick pilot? right? So is it right to do that? So when we're looking at things, like there is a tendency to maybe say, well, what is the rule? Are they allowed to do it? Right? Am I allowed to do that? What often will happen is that, like with airlines and etc., that they will go and they'll look at situations and they'll say, well, first class for volunteers. Would anybody voluntarily like to give up your seat? Right? As we're overbooked, right? And they may offer flight credits and other incentives to get you to remove. And so they're ethically, right? They're trying to take action to try and get a volunteer. But then they have to make a tough choice. Do we take advantage of this regulation that might exist, or policy that might exist, that we can remove somebody to put the pilot on because of the fact that we have, while we're inconveniencing one person, there's going to potentially be hundreds of people that will be impacted if we can't get this pilot to the next city. And so that is a case, right, where they have to make decisions and say, what is fair and just, right? Where can I create the greatest amount of good while really having the least amount of harm? And every organization is going to be focused on that as having to be something that you're going to have to do. Accountants do tend to fall back on this level 4 mentality. What does the rule say? But that isn't always going to be easy to do. So let's do another pulse check where you're a software developer and you're assigned to modify a client's software application. Your company that you work for bid out the project at $250,000, saying it's going to take 4 weeks, it's going to cost this. So there has already been a contract that has been established to say the expectations are this will be a $250,000 project. When you go in, you quickly realize that the same goals can be accomplished for half the cost. So as far as if you're looking at the effort that has to go into it, it really is something that could be done for much less money. Do you offer the simpler solution to your client, or do you simply go ahead and provide the more expensive solution and still take the $250,000, since that was what was already agreed upon? That is an ethical dilemma. That's an ethical decision. I have a responsibility to my stakeholders, right, to have revenue, right, and manage my cash flow and have positive financial results. And I can do that with this $250,000 contract. But I also have an obligation to my customers to be fair and just with them. And am I really looking out for them at the same time? And so when we think about this, right, as we're trying to counterbalance these decisions, sometimes we give up revenues in order to do something that we think would be the right thing, right? Sometimes that's the choice that we end up making. And you can imagine, like particularly for this customer, that if you went to them and said, hey, I found a cheaper solution, they're going to see, because you've demonstrated your integrity, right? They're going to, but you potentially have a customer for life now, right? As they now can trust and respect what it is that you're doing. Because it is something like Aristotle says, we are what we repeatedly do. So if you do something that demonstrates a lack of integrity or a lack of trust, a lack of respect, then that's going to start being the expectations about how you behave in future interactions and future occurrences. And Aristotle would say that every dishonest act that we do inevitably does have consequences on our character, because we become what we repeatedly do. And our past behavior is the best predictor of our future behavior,
because we create habits, right? And habits become difficult to change. Even if we have an intention to change, it's not easy to change. We tend to fall back on what's most pleasant or rewarding, satisfactory to us. We do tend to create these habits, and we want to make sure that we don't let that get in the way of changing an action, a behavior, a practice that deep down we know isn't right. There's a difference in saying, I forgot to book some income when I filed my tax return. So you can say, I intend to report it maybe in my next year's tax return. So you're giving yourself another whole year to fix the problem, which is different than I intend to go and get the necessary tax forms. I'm going to meet with my accountant today. We're going to submit an amended return by the end of the week. You're more likely to do number two than you are number one. Because often what happens is that time passes and they're like, oh, nobody's noticed that this income was missing. We start rationalizing, I pay a ton of taxes. Why should I really pay more? Like I'll worry about it if I get audited. Like we start rationalizing because it might be more pleasant and rewarding, less time consuming to just let the issue go. We start justifying behaviors, and sometimes the behavior justifications are actually inconsistent with what we know is the right thing, the things that we truly value. But eventually, as we make excuses and justifications, our perceptions of what is true sometimes shift, right? You see that a lot of times, like when people do fraud, it starts small. Like we make justifications. It's not material. It's not going to matter, right? Oh, I'm going to pay it back, right? I'll fix it in the next quarter. Like we start doing things that might be small, but then the pattern and the habit starts aggregating. And sometimes the aggregated effect is what matters, or we start getting more bold in doing things that are more material because our behavior changed our values. And we need to put a higher value on what is right versus what is self-satisfying, right? And we need to be aware of where we might be holding back on doing something that we know is more moral or ethical because of it being something that's more pleasant and rewarding for me, right? As I have my self-justification is getting in the way. There also are psychological justifications that happen sometimes, as it might be like when we had the college admissions scandal where people were basically becoming big donors in order to get their child into a particular college or university. There was justification of I only wanted what was best for my child. So that the justification of altruism, it wasn't for me, it was for my child. We find that there is moral licensing that does exist, particularly if I recently did something good. There was a study that looked at, and I don't know how people come up with these studies, but they did. There was a study that said that people are more likely to cheat on a computer game if they recently purchased an environmentally friendly product. So the fact that I did a good deed, I now feel as if I have a moral license to go into some sort of gray area. Right? I partially come clean. I tell you the truth about part of the story, but I'm telling you the whole thing. But because I told part of the truth, that psychologically justifies me around other aspects of things that I didn't clean up or acknowledge. They believe in some cases psychologically that there's a gray area, that there is a room for this justification. There was a study also that was done where there was a game of rolling dice. And if you rolled a 6, then you got money. And they also had in it where if you rolled 6 the first time, then other people got money. So they gave people, in some cases, some people could only roll the dice one time. If you get a 6, then you and others get money. So 19% of single rollers reported a 6. When there was multiple rollers, right, they reported that they got a 6 the first time, 34% of the time. So what the probability of actually rolling a 6 is around 16%. So the percentages went up, right? As we started saying, well, if somebody else is going to get money, and so now, I'm still going to get the money, but somebody else is going to get money if I rolled a 6 the first time. If they rolled a 6 the second or third time, they justified claiming it was the first time because somebody else was going to benefit. It was a psychological justification, right? Having children, we think about justifications. I can remember multiple times where one of my 2 boys would come in and they're like, I hit him because he hit me first. We're psychologically justifying the action, right? As we think about, is it pollution to throw an apple core out the window? Well, you may say, well, the apple core, it's going to degrade, right? It's not going to, ultimately harm the environment. It might feed some birds. So we justify the littering as we have a justification for the behavior that we want to do. I want to throw this apple core out the window. I don't want to have it sitting here next to me, turning brown and looking gross, right? We justify our actions. And we have to have an awareness around that being the case. So here's another pulse check. Is it okay for a company to consistently run a limited time deal to encourage immediate spending? Yes, no, or maybe. Is it okay to consistently run a limited time deal to encourage immediate spending? There's the pulses up. So this example I actually have from, I went on a MSC cruise. MSC is an Italian cruise line that started operating in the US recently. And I get like lots of emails now. And so they'll send me an email and there'll be this running clock at the top, that says, hey, for this price, it's only good for this amount of time. You need to sign up. And then they'll keep telling me you only got 6 more hours. You only have 3 more hours, which is fine as a marketing strategy, except for the fact, like the very next week, I'm getting a whole new advertisement for the exact same price. And they're telling me once again, it's a limited time deal. So certainly there are things, right, where you could say, are there regulations, are there rules, are there things that we need to abide by as we think about advertising and other things? But it also is like, if you're running the exact same deal every time, are you thinking about your customers, and are you thinking about how your customer is going to perceive your sense of integrity? Because I feel like you're trying to dupe me to tell me this is a limited time situation when it really isn't, right, at the end of the day. So whether it's like you have to order now or you're going to lose this opportunity, but really the opportunity is out there, for extended periods of time. If you're not telling the full story, like if I'm only giving you part of the information and I'm not giving you the full information, then it's still something that you have to challenge around how others will view this, right? If you're thinking beyond matters like my customers and thinking about other factors. All right, so when we're looking at these items, you have to think about, well, what do I need to do then if I want to reverse this behavior that I have? Well, first it has to start with, do I recognize why my behavior needs to change, why the decision needs to be different? I need to recognize what is wrong, but also why is it wrong, right? Why is it that I'm maybe not doing the most fair and just thing? And you need to get remorse for the act itself. Sometimes remorse is expressed only because you got caught. And so you're sorry you got caught, as opposed to I recognize the action was wrong. So there has to be an acknowledgement, right? Of yes, I know why this is, and I understand the act needs to change. Then with sincerity, you have to resolve to change. And then you also need to plan future behavioral intentions to be consistent with that goal as we are moving towards trying to show an improvement in our future behaviors as we try to think through, ultimately, like I want to think about not just what's most satisfying for me, what's in it for me, but also thinking about what's fair, equitable, and just, understanding that we can't always live in the world of principled consciousness. We can't always be level 6 in the Kohlberg theory of moral development. But what I can do is recognize when I'm in an ethical dilemma. I can identify and analyze the elements to the situation. I can understand who's going to benefit, who's going to be harmed, but also thinking about your responsibilities and your obligations as an employee, as management, as governance, as a CPA. I'm understanding my obligations. I'm understanding my limitations. And I'm going to look at the alternatives and I'm going to weigh the impact of each of my choices to eventually select what I believe to be the best and most ethical alternative in the end. As you think about choosing the option that offers the greatest amount of good and the least amount of harm. But you also, as you think about what's fair and what's balanced, how will you feel about yourself? How would your mother feel? What would you feel as if this was something that was published in the local paper? Those are also checks that you can make to ensure that you're not thinking about the psychological justifications or the self-justifications that might get in the way of really being able to make the best decision. So I also just want to briefly talk about, as we're looking at these matters, that there is focusing on, say, the foundational control environment of an organization. As you probably are familiar with the COSO, Internal Control Integrated Framework, there's a reason why the control environment is at the base of your pyramid of controls. It's the foundation for everything else that you're doing. We need to have a commitment for establishing expectations with a code of conduct and having a conflict of interest policy, having ethics training, right? Having processes to evaluate performance against standards of conduct. There has to be a demonstrated commitment by the organization related to ethics and integrity. And there also needs to be an oversight function that does make sure that we're following through with these expectations, with these directives. We need to make sure that there's somebody that's overseeing management that can be more objective of thinking about the balance needs of the organization as a whole. So we definitely have like our controllers, our CFOs that are focused on the external financial reporting and complying with the various GAAP and SEC and other regulations that might come into play. But we have governance that can be sitting there focusing on saying, yes, we understand that that's a goal, but we also have to think about operations. We have to think about compliance with things that don't have a direct and material financial effect. We need to focus on ESG and customer perspective and other matters. We need to have an individual or group of individuals that is providing that additional oversight. And there does need to be the fact that I may have to ensure that there is assignment of roles and responsibilities explicitly, as we have a structure that allows for us to make sure that we're achieving our various objectives with operations, strategy, compliance, reporting. But we also, in establishing this commitment to integrity and ethics, we're also saying, even if you're not explicitly signed with a specific role and responsibility, we still want you to speak up. We still want you to say, be a whistleblower if you know or suspect fraud or non-compliance with a law, regulation, contract, agreement. We want you to speak up if you don't believe that somebody's making the proper choice and decision. We need to have a sense of individuals that we hire, develop, retain, those that are competent to not only carry out their assigned roles, but also that we can count on to make good choices, to make good decisions, right? And remember, the majority of people would prefer to work for an organization that reinforces these concepts, where they work with an organization that they feel confident is functioning with a sense of integrity. And part of that really needs to be that we're focused on holding people accountable, right? As we are making sure that there is ramifications, there's outcomes that occur if you aren't making the right choices, if you're not behaving in a way that's expected by the values of the organization. So here's another pulse check. Are you obligated to report the discovery of unethical behavior? Are you obligated to report it? Our code of conduct would say, as a CPA, you have an obligation to tell an appropriate party. I have an obligation of notifying somebody, whether it's my supervisor, right? Whether it's the board, whether it's being a whistleblower, but you are going to take appropriate measures, right? You are going to follow proper channels to go through the policies and procedures that exist in order for you to be able to communicate with somebody about your concerns so that they can then go through the process of investigating these items and determining ultimately what they believe the consequences and ramifications should be. So certainly the SEC is there as part of their mission to protect investors, to ensure that we have a protection of having an efficient and orderly market as we look at forming capital, to make sure that meaningful information, both financial and non-financial information, is made available to investors and potential investors. There are various groups within the SEC that's assigned with these roles of looking for detecting irregularities and investigating these issues. The fact that there's an office of a whistleblower that is meant to encourage the ways in which we can get tips and information that might lead to an investigation. But also with Sarbanes-Oxley creating guidelines to say you have to have a code of conduct, right? This is something that you need to make sure that you have a commitment to integrity and ethical decision-making, and helping ensure that we can help better determine when we have cases where organizations might not be doing something consistent with what would be deemed proper business practices. As mentioned, our code of conduct as CPAs are also there to say we need to function with the highest sense of responsibility to the public, right? We want to make sure that we're thinking about others that will be affected, but I have to think about the public's interest first and foremost, as we're following principles that honors the public's trust more than any other obligation that we might have. And the code of conduct is purposely written in a way where they're saying whether you're in public practice or whether you work for an organization or whether you're a volunteer or retired, like we still want to make sure that we're all following these concepts, that you're not doing something that would discredit the profession, that we're making sure that I'm looking at my threats to maybe be able to make a decision with integrity and objectivity, threats to my ability to be professional, threats to my ability to be competent in some of my decision making. If there's a threat, I need to go through steps to either eliminate or mitigate that threat. And there's a variety of areas that are paralleled, whether I'm in public practice or whether I work for business and industry. there's things that they would say would be something that wouldn't be permissible, as we do want to make sure that we're following these foundational principles and that we're understanding that voluntarily they're counting on me to make good choices. Secondarily, it is that I could be reported to my state board of accountancy or reported to the AICPA or reported to a regulatory body like the SEC to say, hey, we think that there's something larger here that needs to be investigated. Specifically within the code of conduct, it does say you are responsible for the actions of any people you're associated with, as it focus on if I have the authority or capacity to control that individual. So I can be responsible for your actions if I have the authority or capacity to control what's happening, including potentially being a whistleblower. So here we have another pulse check that we're going to be doing. You are the controller for a company. The CEO wants to do something nice for the CFO, and the CFO is the largest customer because they're really good friends. The CEO wants to send them and their spouses for a week-long vacation at a 5-star resort in the Caribbean. So they're coming to you and saying, I would like for you to approve this. So is it okay to authorize this disbursement? Because the CEO is asking you to do so. And you would have to go through and think about this. And first of all, is that consistent with policies and procedures? Are there authorization levels that we might need to go through to get approval for this? But also there could be implications like, well, am I supposed to be reporting this, right, on their, for tax purposes to them because we're giving them this gift, right, that existed? So there are a variety of things that you would have to sort through to really be able to look at that situation and say, well, ethically, like what's the right answer here? Despite the fact that this is a request, sometimes we have to say, no, I can't do that. Or here's something that we could do that I think would be acceptable. And so are there alternatives in ways that you can still go and do these rewards to reward them for maybe a job well done that is more consistent with laws, regulations, but also policies and procedures, but also just what is fair and just. As we're getting closer to the tail end of our program here, I want to make everybody aware and ensure that you're aware, there is a ethics interpretation that is fully effective that focuses on any CPA, whether you're in public practice, whether you're in business and industry, any CPA through the course of doing your job, right, in close of doing your professional responsibilities. If I become aware of something that is potentially going to be a non-compliance with a law regulation that could have a direct and material effect on the financial statements or the ability of this organization to continue functioning, substantial harm could result, either financial or non-financial consequences that could impact people. So if I know or suspect this happening, they're saying as a CPA, you need to notify somebody. You need to tell an appropriate level of management. You need to potentially tell governance so that they can go through the process of looking at the situation and try to fix it, right? Try to mitigate the consequences, try to deter it from happening again. And in even cases with public accountants, they would say, you may need to walk away from this client. You may say, this isn't an entity that I feel comfortable being associated with because I'm questioning their integrity and ethics because they're not following through when I told them there's this concern and I don't feel comfortable how it's been resolved. And yes, even as an employee, it may be that the best answer in some cases is to resign, right? To find another job, right? Because it is something where you can always get another job, but you can't always get another reputation. So there's going to be things where within the code, they would say if you were aware of these issues and you didn't take action, you can actually have where you could have an effect on potentially losing your CPA license. And it doesn't have to be necessarily a law regulation that is directly related to accounting or finance. It could be something like I am concerned about violations of health and safety codes. I'm concerned about data protection of personal identifiable information, right? These are all things that we do need to think about. So as we look at our last and final polling check here, do you have a responsibility to speak up if you know that there was a data breach that led to personally identifiable information being possibly exposed to hackers, and the company is not notifying affected parties? So if you're aware of it and the company is not taking proper action, what's your responsibility? As we are like, hey, this is a problem. I know that there is notification provisions out there. So this is an important example because there are where in the sense of applying this ethical principle about notifying people around non-compliance with laws and regulations or NOCLAR, they understand, the AICPA, they understand that you're not an expert on you're not an expert in everything. Like I don't necessarily understand all of the OSHA regulations, maybe as a controller or CFO. And they get that. But you have to be competent in the job you're doing, and they understand that. But if you know or suspect that, hey, I think this might be a problem. I'm not an expert in this area, but I'm concerned. If you suspect it, and it could have serious adverse consequences, financially or non-financially, to impacted parties, they're saying you need to notify somebody that can explore it. Right? So I don't have to be knowledgeable about all of the nuances of laws and regulations to throw up a red flag to say we potentially have a problem with complying with the law regulation here. So you're not expected to have any expertise beyond what you're required to do in your role as whatever it is, controller, CFO. But you are obligated to alert people so that they can take corrective action. And in looking to say, well, what do we think it would be the right, how far do you take things? They have stipulated that somebody that's at a higher level of the organization, right, somebody that's in more senior positions, they would have more expectations about what was a reasonable response or action on your part compared to somebody that maybe is just the bookkeeper or the payroll clerk, right? Different levels, there'll be different levels of expectations around what would be prudent for you to do given your level of authority and given your level of having to be able to interact with other higher levels of the organization as well. In addition, they're saying if you suspect that there could be this major deal, you have to notify the external auditor ethically. You have to alert them so that they can include that as a factor of consideration on their risk assessments that are going to lead to them designing the nature, time, and extent of the procedures they think are necessary in order to give your audit opinion. So you are ethically obligated to notify your auditors. At the same time, that you do have obligations of focusing on things like I'm supposed to be keeping information confidential, right? I'm supposed to be making sure that I'm not violating these provisions around protecting information that's not publicly known. Yes, sometimes I have a conflict between maintaining my obligations of confidentiality while also trying to figure out, well, but I think this is something that people should be aware of or somebody should be aware of. They want you to, if you take an action where you believe there's a conflict between two principles, document, put a memo in your files. I'm aware of the conflict. Here's why I decided that this action that I took was the most fair and just action. Here's why I thought being a whistleblower meant more than the confidentiality provision, as I'm looking at the specific facts and circumstances that exist. Now, also, if you're in public practice out there, you have an obligation, even if you're just in the tax department, to have a conversation with, say, the audit partner if it's in your same firm or network firm. You should be sharing information within your firm or network. Now, I'm not obligated to go and tell other firms about my concerns, but it's prudent to tell others within my firm that could impact their work, but also for me to communicate with management and governance of the client. Even in a group audit situation, it might be that there's things I've got to communicate as I think about what's my obligations to the group and what's my obligations to maybe management and governance of components of these groups. It is true that you aren't supposed to talk about matters about the client or about your employer without permission, but there may be cases where in order to achieve that right balance, I need to weigh my alternatives. And given the facts and circumstances, and given the public's interest principle that is meant to override everything, I may be able to justify a departure. But they're going to say you need to have documentation about these matters, right? As you are focused on these issues. They also would say, follow the process, follow the channels, because of the fact that you are want to make sure that you tell management first and let management have a chance of responding. If management's not responding, then maybe you then go up to governance, right? And I tell governance about it and I give governance a chance to respond. If governance still isn't responding, I may then be justified, particularly if it deals with a publicly traded entity or even an entity that is subject to, say, government auditing standards or yellow book, right? As we have public resources and the stewardship of those resources, it might be important as well to go through and say, well, okay, maybe my obligations are to tell the federal agency or to tell the SEC because I've given them that chance to do the right thing and they're not doing it. So what were your judgments? What were the course of actions that you took? All right, so when we're going through and reflecting on today, the goal was to try and give you food for thought, right? To understand the concepts that we exist where we do have to have an approach that tries to find that golden mean as we're trying to have our most fair and equitable choices. If there are any specific questions related to this, hopefully either directly or indirectly, I dealt with some of these items, but I'm going to turn things back over to Grant so he can start wrapping up.
Well, thank you, Jennifer. Once again, just a great program today. Very informative, very timely, and very helpful, and lots of positive feedback throughout the entire presentation. So thank you very much. Really loved it. And thank you, everyone, for attending. We really appreciate you spending your morning with us again today. I'd also like to thank our exceptional marketing support team, which is really 3 for 3 so far. The Cherry Bekaert Group, including Amanda Kiefer, Maddie Robbins, Leah Gearhart, Ziba Farha, Kate Dharma, and Eunice Arias for preparing and running today's event. It's perfect. Our next event will be Managing Your Risk, Innovation in Employee Benefits and Business Insurance with Allie Gregory, an employee health and benefit consultant at Marsh McLennan, which is also a new sponsor to FEF. Finally, I'd like to thank all of our sponsors for their support of our 2024 Executive Financial Forum webinar series. And with that, Thank you and hope everyone has a great remainder of the week. See you next week.